Why would someone shift from investment banking to credit research? And what is credit research in the first place? Today in this episode, I talked to Daniella, who started her career as an investment banker at Jefferies and now works as a credit analyst at Moody's. We talk about credit research and what is the difference between credit research and investment banking. I hope you enjoy the episode. You've done around a year at Jefferies as an investment banking analyst, and you work now as a credit analyst. So can you tell us a bit more about that shift? Why did you make that shift? And then we can touch a bit more on what you do now at Moody's.
Sure, yeah. So investment banking is still a bit of a kind of it is a sell side in the market. And a lot of your tasks and work are still very much related to kind of selling potential financial products. So there's a lot of pitching, and I wanted something a bit more going to more analysis and deeper analysis, which is what we do in credit research.
Nice.
And I'll maybe talk in a bit more detail in a bit about it as well. But you really own a portfolio of companies. You really own these companies and analyze the risks, and you're basically building the expertise in that.
Nice.
Which is essentially why I wanted to go into more the analytical kind
focused.
of focused.
Nice.
Exactly.
Nice. You started as an investment banking analyst, and then now you work as a credit analyst. So you said that this analysis part is in common, but what do you feel is different in these two in terms of, you said you're doing a bit more pitching, more analysis. So what skills do you feel you're learning different, and then what kind of, when it comes to work-life balance or culture, what do you feel was different or is different between these two jobs?
Yeah, I think in terms of the skills, in investment banking, at least as an analyst, you work quite a lot with PowerPoints. I would say even a bit more than Excel to prepare presentations for clients. That's really probably 70% of time you use PowerPoints, and then the rest is Excel. In credit research, it's definitely more of Excel, not that much of PowerPoints. And you definitely dive deeper into financials of banks and companies, trying to really understand everything, the nitty-gritty parts of their performance, versus in investment banking, you, at least as an analyst, you're more focused on valuation and kind of, especially if it's public companies, publicly trading companies, you look more into how they're being valued in comparison to their peers, for example. So this kind of things, which are more markets oriented.
Broad. Would you call it more broad analysis? It's not at that deep level as you go now, or is it deep but only company and sector focused, and it's missing that macro part? How would you?
I would say, at least from my experience, of course, it doesn't necessarily mean that it applies to the whole investment banking industry, but from what I've experienced, I think in investment banking, it was a bit more focused on the broader kind of valuation, things that are driving the valuation, and just understanding the key performance metrics. But in credit research, we're really trying to dive very deep into the specifics.
Nice.
So that was the skills one, and the second
then
part of that.
How did your learning part differ? So what do you feel is different? So I'm assuming the focus on the analytical part is different, but how did that, do you feel, influence your career growth, for example?
Yeah, I think in terms of career growth, I can see definitely people exit credit research more into going into asset management or credit on the banking side as well sometimes. So, or hedge funds sometimes as well. So that's the key exit kind of strategies, opportunities. For investment banking, most people, from what I've seen, also go into private equity. And then from there they can, pursue other things as well. So I would say probably these are the key differences. And of course the culture is very different as well. And investment banking, of course, hours are very long. You work on weekends as well. Sometimes it can be a bit depends, of course, on a case, a person,
project,
the project. Sometimes people can be a bit cutthroat as well. It's of course not all the time. They're also nice people as well. in credit
it's like
research,
transactional focused from what I understood as well. Like it's very, we need to get that deal done and move to the next one. So maybe once you now shifted to credit analysis, it's more really need to do this analysis well, because someone's going to use it to see whether they want to invest in this bank or sector or whatever, right? Is that...
That's actually, there's like a lot of like long-term client interaction, at least for the analytical side, because especially more senior analysts who are like VP kind of like level, MD level, they talk and they have this like really relationship building with like their issuers, investors, and so on. So yeah, and in general, from just my experience, but I think like from what I've seen is people are, the culture a bit like better in credit research and hours as well. You don't work like 100-hour weeks. So yeah, that's I would say quite a big difference as well.
Nice. That's good for you. And can you a bit now tell us more about what you do now as a credit analyst? Because I think you're also in the same sector, which is like the financial institutions group.
Exactly.
Is that correct?
Yeah.
So let's start with, what does Moody's do? And then we can maybe dive a bit into your role.
Yeah, sure. So Moody's, basically the core business of it is credit rating agency. But there's also another kind of sister company, which is called Moody's Analytics, and it does different data, offers different data products, different research pieces, and so on.
Nice.
I work in the credit rating agency, which is Moody's Investor Service, and what we do is we rate different companies. For me, it's banks in the FIG team. And we assess essentially the credit risk of banks. That's, I guess, the key aspect of the role, but you also work on research related to both specific issuers or companies, but also different market trends. For example, what you see in the banking sector, how does the economy affect the sector, the key players, and so on.
Nice. So... as we all know now, the banking sector is not doing very well. So I read a lot like Moody's have revised their outlook on this bank or on this country, like economy. So in terms of your specific role, like how do you assess that risk? And when we say risk, what's the risk? Is it like the risk of repaying loans that the bank issued? Like,
Yeah, so it is essentially a risk because banks also issue debt to finance their operations. So we assess the risks of banks or other companies defaulting on their obligations, essentially, or not being able yet to repay them. And how we do that exactly is, first of all, is of course looking at the fundamentals or financials of banks. So key performance indicators like asset quality, like I'm not gonna go into too much of the details, but also apart from that, because banks don't operate in a vacuum, they operate in different countries and are of course influenced by regulations. So we also look into the macro sectors that they operate in. And of course, we do not just look at it at the point of time because, macroeconomic cycles, they, can be volatile.
Are periodic or
Yeah, so we try to look into more forward-looking indicators as well to essentially rate companies on a kind of 2-year period basis to, have a bit longer-term view for that.
Nice. So. And I want to dive a bit more into your role in terms of what do you do day to day. So like the big picture is analyzing that risk or like the credit analysis, but what does that look when you start your day? How does that work? What do you do? Maybe it's day or week, whatever you feel makes sense to break.
Sure, yeah. So essentially you as an analyst, associate analyst, that's like the role that I'm on right now, and you own a portfolio of banks or companies. And you're basically taking ownership to understand what are the key drivers that can affect the bank's ratings. So what you can get involved with on a daily basis is participating, for example, in earnings calls of companies and seeing how they did, for example, this past quarter, past year, seeing if anything has changed that can be a red flag, and we can potentially take a bank to a rating committee. And if something happens, we basically, that can affect the rating of a company. We prepare materials and analyze the fundamentals, different elements that can affect the rating, and prepare committee materials. after that, we take it to a committee and people vote on what they think the rating should be like.
Interesting. So that's an internal committee within Moody's.
Exactly. Okay. Yeah. So, and people vote on that. It's like a very big process. So that's another thing, which is part of the rating kind of day-to-day tasks. And also research. So on the day-to-day also get to, for example, get some data and analyze, understand, what are the recent trends in the market, and then you basically help prepare research on different topics as well.
Nice. That's interesting. And what tools do you use? So, like, is it Excel analysis, or is that like a company specific, or like what are the key tools that you use in your job?
Yeah, definitely Excel. That's the main one, really. A bit of PowerPoint as well. Also, sometimes to pull some data, we use Bloomberg or FactSet, like a similar data platform. We have also a bit of internal tools, but these are like the key external ones that we use.
Nice. And for a student who's maybe interested in that job, what key skills do you think are important that a person that works in this job should have to excel at their role?
Yeah, I think definitely analytical skills and curiosity to dive deep into companies' performance, financials, fundamentals, to really understand them really well. So analysis is definitely key, I would say. It's also important to kind of focus on client interaction as well, because we do talk to investors, to clients, to issuers as well, who we analyze. So that's another thing. But I would say definitely like technical skills are the key part for junior roles. Like financial analysis, of course, as well, just understanding how markets and specific sectors work. That's the key part.
Nice. And usually when it comes to working at Moody's, like a credit analysis company, is it people coming from investment banking to credit analysis companies, or there's different career paths that, or like a graduate can directly get into credit analysis if they have the technical knowledge?
Yeah, I think it's definitely common for graduates to go into credit research pretty much straight out of university. So there are different graduate schemes as well, which you can apply for. It is, usually it's a graduate role, but there are also, of course, we have actually a few colleagues who previously some worked in sales, for example, sales and trading and things like that, or the sell side. Some actually worked, for example, in retail banks and so on. Credit risk is also another common kind of field. So people work in credit risks of banks, and then they go and actually analyze them at Moody's. So we have, of course, people who have already some experience and go into these roles. But you can also apply
as a graduate. Nice.
Sure.
When you say like analyze the risk, do you really do like any heavy valuation, like investment banking? Or is it more research focused? Like, what do you exactly do to get that output of, okay, here's the risk on you, like, because it's a grade from A to C.
So
exactly. Like, how do you get there in your role? Like,
we have this scorecards, which are like internally developed models. So what we do is we look into different ratios of banks, and then you kind of like input them into this model. And it gives you an output of a potential rating. Of course, it's not just something that you like input into the model and that's it. That's your outcome. There are also other things you need to consider, which is why we have rating committees, but that's kind of like an initial stage of the analysis. So instead of like in investment banking, it will be more kind of like a DCF or any other like model to value and assess the company's valuation. In this case, we use like these internally developed models to assess the company's credit risk, essentially, and the rating.
So it's more looking at different data points, the number of loans that the probability of that bank paying all their loans, for example, and like just inputting all these different data sets and then getting the output, and then there's still more analysis with the committee in the company, etc.
Exactly. Okay. We'll look into other qualitative factors, but exactly.
Makes sense. Can you share with students who are interested in applying to investment banks in London what's the process like when it's applying to Jefferies, for example, the steps, and how did you prepare for each of these steps?
Sure, yeah. So usually, especially for the UK and the US, the application cycle starts very early. So your senior year, when you're like the last year when you're about to graduate, the summer before that, like August, September, that's when applications open, usually early September.
Yeah.
So you have to be prepared to apply in the first couple of weeks of September, really. And the way the process works is you fill out an application form, like cover letter, CV, the standard thing. Sometimes they send you like the standardized tests, the psychometric one.
The maths, yeah.
Exactly. And then after that, had one interview with Jefferies. And then they invited me for a super day, which is like this day of about 3 interviews or so that I had. They were like technical, behavioral, and kind of markets oriented interviews.
Nice.
And you also had to solve a case. They gave you like this case to analyze and present. Basically, you had an hour to look at the information and then give a small presentation.
Nice.
So that's how, and usually that's how the whole recruitment process works in investment banking.
Yeah.
The last stage.
Did you have any screening? So it was the CV cover letter part, and then the technical, like the exam. You did like a maths exam.
Yeah, exactly.
And then after that, was the interview with like a technical person in your role, or was it with HR, like the first live, let's say, with a person interview? Like what was it exactly?
Yeah, actually there was no HR screening call. It was straight like the technical interview.
Nice.
It was kind of like a combination. It was a technical, motivational, like markets oriented, but it was pretty much straight with a like senior person in the
company.
Yeah.
Nice. And in terms of preparation, what resources did you use? Like, how do you advise people to prepare for that first step, let's say?
Yeah, definitely reading the news, like reading Financial Times, Wall Street Journal is super important to keep up to date, because they're definitely going to ask you questions on like recent deals you found interesting, key like markets related news and so on. But definitely also technical interviews. I used Breaking Into Wall Street. It's like this really useful source where they have basically all questions you may be asked in an IB interview. So I was using it quite a lot to prepare. Nice. And I've had like a few banking interviews, and pretty much all questions I've been asked, as far as I remember, they were all like very similar to that resource.
Nice.
So that was very helpful. So that's like the technical part.
The first phase, and then like the technical part.
Yeah. Actually, for both. Okay. Yeah, I would say honestly, like difficulty-wise, they were pretty much the same. The first and the super day. It's just that the super day you meet more people, you have more interviews, but questions are very similar. So nice. And definitely like learning more about the company, like showing why you're interested specifically in that company, in banking as well. So that's another one that's important.
Nice. We can maybe a bit touch on the credit analyst role internship. You had like a 1 year of experience. So how was that process, and how did you prepare for it?
Yeah, so when I was in Jefferies, I talked actually to a few people from different companies in equity research, credit research, and I, found it very interesting. So, decided to essentially start applying to these roles.
Nice.
And with Moody's, I got lucky because I just applied online, and, a recruiter got back to me.
Nice.
I had an HR screening call. They just asked some very basic questions. And then after that, I had 2 more rounds of interviews. Nice. So one was with the team manager, and the other one was with more senior members of the team. Yeah. And that's essentially, and there was also a mix of technical questions, also because it was for a specific sector team, FIG. They asked me, of course, way more questions on that sector, also because I already worked in FIG before. But I would say, if you're applying for a graduate scheme, they wouldn't necessarily expect you to have a very detailed knowledge of especially FIG, which is not as popular in universities per se. That's nice. How the process went.
And for someone who wants to prepare for that process, what exactly should they really focus on? Any resources that you recommend?
Yeah, definitely. Again, like reading the news, that's super important, and staying up to date with the market. Also, if you're interviewing for any specific sector, like really still making sure that you understand how it works, how to analyze it. Because, for example, analyzing banks is very different from analyzing corporates, like in startups, like businesses, because their like whole financials are very like
different.
It's different. It's very like it's not necessarily intuitive.
Yeah.
So really trying to understand like how you would analyze this specific sector.
Nice.
And of course also like having a motivation behind why you're applying for this role, this company specifically as well.
And do they go very heavy on technicals in these interview in terms of the modeling theory part of finance, or is it just more on sector and like valuation of banks specifically, or is there theory part?
Yeah, so for credit research specifically, there's not that much part of valuation because like it's not really the key aspect of analysis for credit analysts. It's more on, I would say, focused more on financials, like different ratios, which you do when you're analyzing a bank, for example. So this kind of more fundamentals, I would say, but you don't really do any like heavy modeling or anything like that.
Okay. And thank you a lot for your time and for coming today. Also, Daniella has a YouTube channel on professional development and personal finance, so I'll put the link in the description so you can check it out. Thanks a lot, Daniella. Thank you for watching, and see us in the next episode.
Thank you.